Welcome to this FinGraphs market overview on Dukascopy TV. Today we'll start with the hourly charts of the euro-dollar or the perspective over the next few weeks. We could see the price action last week, which was a huge rally. And I just want to go back over the last 2 weeks to see how it would have benefited you to be online with the fingraphs.com system. You could access it at fingraphs.com and you have a 7 days demo trial. So if we go back to the situation 2 weeks ago, we had a long-term downtrend on the long-term chart. We had a correction up on the daily chart, and we had just ignited an impulsive down on the hourly chart. Let's see how this situation evolved. So you had just a bearish price projection on the hourly, which a few days later turned neutral, meaning no targets anymore, to then make it into a corrective up bull trend, then igniting an impulsive up early February up to above 111. With the acceleration, the price projection moved up to 111.80, and finally into the final move up to above 112 into the target zone. Now this is the situation as of today. We've had a huge rally, we've reached the target, but the trend is still heading up. We have initial points of stress with an overbought situation on our risk indicator and our envelopes touching each other. That's usually what happens in an intermediate top. We would expect another week of uptrend and with the possibility to make it up to the higher 112 levels. Now switching to the daily chart or the perspective over the next few months, we've had a correction up. We've pretty much reached its objectives. It probably has a bit more to go, as we saw on the hourly, but in order to create a very strong or long-term up move, it would really need to go above 113.25 and ignite impulsive targets up. This is not yet the case. The weekly chart is still in a downtrend. It's pretty much coming into its target zone. It only reached it slightly in terms of price targets, but in terms of time, there's not much time left. There still remains the possibility or the risk to make it down to below parity. So when we take our three charts together, we are still in a potential pullback in a downtrend. It's still a long-term downtrend. It may be quite exhausted, but it's still in place. We're in a correction up in gray on the daily, and we have reached the impulsive up targets on the hourly, but it doesn't seem quite finished yet. Now moving on to dollar-yen, we'll also start with the shorter-term hourly. The shorter-term hourly has seen quite a reversal of fate over the last 2 weeks. It first came up to break above 120 quite aggressively, and then we saw a reversal of this move, pretty strong, and it is still in a downtrend as we speak. Over the next few weeks, it could make it below the 115 levels. It is not yet oversold. Now scoping out into the daily chart, we could see that the daily chart is still in the downtrend. We could also see that if we could draw a trend line here, that the test that we did last week came up to hit that trend line and then was rejected and moved down quite aggressively. We could also see that there's a strong support and resistance zone here in the higher, well, just above 120 or just below 120. And it has worked again very effectively in rejecting the breakout. So at the moment, we're still in a downtrend. Over the next few months, we could make it down below 115. We've made an intermediate bottom, but it doesn't seem to hold. And if the price action was to become positive again, we'll see strong resistance towards the 120 level. Now in that environment, the long-term trend, so the weekly trend, is still in an uptrend. It's quite extended, it's an impulsive up, but we cannot exclude that once this correction down is over, we could make it back up into the higher 120s up to perhaps 130. But that is measured in quarters, so that's probably for the second half of the year. So now if you take the summary, also a consolidation period in an uptrend, still in a bear on the daily, a bear on the hourly, and still an uptrend on the weekly. We will have to wait out until this consolidation is over, until we can have a positive stance on dollar-yen again. Now moving on to gold, we also saw a huge move last week. It doesn't seem quite over yet. As you see, we're not quite in the overbought zone. Yet the targets have been reached and we're in an impulsive up done. So we don't expect that over the next few weeks there's much more to be gained here on gold. It's probably time to consider profit taking. That said, the move that we have moved above corrective targets and is now showing impulsive targets that could make it well above the 1200, up to 1227 and possibly up to 1281. We think that at the moment it's probably premature to see the higher range, but we could still consider the 1227, and that could happen over the next few months. What we want to stress is that the long term is still in a downtrend. It has pretty much reached its targets, but the bear is still in place. You can see a breakout here of what is perhaps quite a long-standing triangle, and you can see that the risk index is oversold. But at the moment, it is still in the bear here, and if you look at the levels, you could see a lot of support and resistance that have been tested before around the 1200 level. So we really need to go above this 1200 level to create something which is strong and could reverse this long-term downtrend. So a consolidation, a pullback in a downtrend. So we're moving up on the daily with quite aggressive targets. The hourly is probably coming towards some intermediate top, but the weekly is still in a long-term downtrend. Perhaps exhausted, but it's still in a downtrend. Now moving to the S&P and markets. This is the S&P future. We're starting with the weekly chart or the long-term chart, and we've seen quite negative price action since the beginning of the year, and more generally since the second quarter last year. This correction down doesn't seem to be over, still has some potential, and it could move between 1690 and 1850. That said, in order to create a crisis as we saw in 2008, it would really need to go impulsive and move below these corrective targets, which on the future is around 1690, which on the cash is around 1700. So at the moment, we can only label this as a correction down. Yet it is a strong correction down, and it doesn't seem quite over yet. Looking at the daily, it is in an impulsive downtrend. Targets could lead us below 1800, and at the moment, the small reaction that we saw on this oversold situation seems to be almost over, and we're moving lower again. So still quite dangerous on the daily chart. The hourly chart does seem a bit exhausted. It's in an impulsive down move. Its impulsive down is done. That said, the risk index is not in the oversold yet. So we'd still see some risk here over the next week or so. So three bears, potential continuous downtrend. It's not a full-fledged, long-standing bear market yet because you're only in a corrective down move on the weekly, but you have to be very, very careful over the next few weeks and months because the daily and the hourly are still heading lower. Thank you very much and have a great week.